Anton Tagliaferro, one of Australia's best investors from Investors Mutual. Thanks for joining us.
Thank you.
And a lot of talk about the bank stocks being overvalued and some of the most expensive banks in the world. Anton, what do you think about bank stocks at the moment?
They're not cheap. They've had a good re-rating, but I think they're pretty well positioned in terms of their debt books. There's no bad debts. They're pretty well capitalised. They pay good dividends. So I think on any price weakness, we tend to be buyers rather than worrying too much about their valuations at the moment.
And in terms of the valuations, a lot's been spoken about the price-to-book ratio of Australian banks relative to the price-to-book ratio of overseas banks.
Mm-hmm.
How do you look at that?
Well, again, the price to book, it really depends on what's in your book, because a lot of overseas banks look cheap from a price to book, but then you wonder what's in that book. And there's a lot of sometimes doubtful things in that book. So I think the thing about Australian banks is, yes, the price to book is high, but that really reflects the very strong profitability of the banks, particularly in the mortgage market in Australia, where they can earn very good margins. The Australian housing market has remained strong. So they earn good margins with very little in terms of bad debts at the moment.
So you're comfortable with the banks, current valuations?
Yeah, as I said, they're not cheap, and we're not buying them necessarily today at today's prices. But whenever there is some weakness, particularly if it's induced by some offshore events such as Ukraine or Russia, which really has nothing to do with Australian banking or mortgages, we tend to be buyers rather than selling.
No worries. Anton, thanks for your insights. Thanks for your time.
Okay.